Okay, I hope we can see the screen.
Yes, sir.
Okay, wonderful. All right, so last week we started with IFRS 16 leases. Okay, so we talked about what a lease is. We said a lease is a contract and it allows one party, it's a contract that allows, uh, that involves two or more people, and one party is called lessor and the other person is called lessee. So basically, it allows another party to use someone's assets for a period of time. Yeah, and the person has to pay for for using that asset for that period. Okay, so a lease is a contract that conveys the right to use an asset for a period of time in exchange for a consideration. And we said the rationale for a lease is to use an asset without purchasing it outright. Like a typical example is renting an apartment. You know, you don't necessarily have to buy the apartment before you can use it, but at least you can rent it for a period and enjoy it. Okay, so that's how lease works. Then we learned about certain key terms under lease. We talked about inception of lease. We said inception of lease is when the parties to the lease, the date that the parties in the lease agree to the principal terms in the contract. You know, lease is a contract, so the date that the parties will agree to some of the key terms in the contract is the inception of the lease. And now we have commencement. Commencement is when the lease starts running. Okay, when the landlord or the lessor will start, counting the days. And then we have the lease term. Okay, the lease term is the period in which the tenant can use the assets. So it can be 2 years, maybe 1 year, 3 years. So that's the lease term. And then we talked about lease payments. So that's the annual rents or the annual rental, the amount you pay every month or every year, depending on the arrangements. Then we talked about guaranteed residual value. Yes, we said sometimes in the contract, the owner of the assets or the landlord or the lessor will tell the user or whoever is going to use the asset that when you are bringing back the assets, make sure the asset is valued at a certain amount. So if the user also agrees, okay, when I'm bringing back the assets, I'll make sure um, the asset is a certain amount, then that becomes a guaranteed residual value. Okay, then we have unguaranteed residual value. Okay, so that's the portion of the residual value which the tenant or the user is not going to guarantee. Okay, so that's the unguaranteed residual value. Okay, so and we talked about lease accounting. Okay, lease accounting. So we said there are two types of lease accounting. We have the lessee accounting, okay, and then we have the lessor. You know, because there are two parties, each party has to account for the transaction. And so there's a way the lessee will account for the transaction, and there's a way the lessor or the owner will also account for the. So the lessee will be making payments, okay, and then this person will be receiving the money. The owner will be receiving the money. So there's a way this person will account for the there's a way this person will also account for the lease. Then we talked about lease liability, and we said lease liabilities are the all the what's the name? All the lease payments that has to be made over the period. So maybe year 1 you have to pay a certain amount, year 2 you have to pay a certain amount, maybe 2,000, 2,000. Year 3. Okay, when you add this together, you get 6,000. So this is the lease liability. That's the amount you have to pay over that period. So it's a liability. But because we have to pay in the future, okay, we have to find the present value of all these. So we said the lease liability is the present value of all the future lease payments. Okay, it's the present value of future lease payment. Yeah, so that's it. Okay, and then we also talked about right of use. So the right of use is the as you pay for the lease, you're also giving the right to use the asset. Okay, so that's right of use refers to is the value of the rights you have received for you for in that lease transaction. Okay, so you have leased maybe an office building, okay, for a period of time. So the right of use is the right you have to occupy the building. Okay, so that's the right of use. When it comes to accounting, there are always two sides to a transaction. There's always a debit and a credit. So if you are making payments, which is the lease liability, there should be a corresponding asset to you. Like for instance, if you go for a bank loan, even though you are owing the bank, but you are holding money. So you have a liability that is by going for the loan. You have to pay the bank. At the same time, you are holding the money. So and that money becomes an asset. So you have a liability, you have an asset. The same applies to lease. Once you are making payments, okay, you also have an asset. You have the right to use the assets. Okay, so that's what we learned last week. Okay, now we go to okay, we got here. So we looking at depreciation of leased assets. So a leased asset is also depreciated. If you have a leased asset, we depreciate it. Somebody. So yeah. So let's continue. Yeah. So let's look at depreciation of a leased asset. Okay. So you're going to lease an office building. For maybe 10 years. You are going to use this building for 10 years. All right. And then, but the useful life of this building is maybe 50 years. Okay. As for the owner, the useful life of this building is 50 years. But you have gone to lease it for only 10 years. Okay, so the question is, when you are depreciating, you as the owner, sorry, you are the lessee or the tenant. Okay, when you are depreciating it, are you going to use the 10 years or the 50 years? Okay, so that's a question we need to ask ourselves. Okay, so a leased asset is depreciated just like any asset. A leased asset is depreciated just like any asset. Okay, and there are two issues here. A leased asset, the asset itself may have its original useful life. Okay, so for instance, this building, when it was built, the useful life is 50 years. But you're going to lease it. You're going to lease it for 10 years. Okay, you are going to use it for 10 years. 10 years. So, are you when it comes to depreciation, are you going to use the 50 years or the 10 years to depreciate it? Okay, so you have to use the 10 years. Okay, you have to use the 10 years because you are only going to use this for 10 years. So the rest of the years is not part of your business. Okay, but assuming that the asset has a useful life of maybe 8 years. Okay, and you are going to lease it for 10 years. So which one are you going to use to depreciate the assets? Okay, so in that case, are you going to use the 10 years or the 8 years? The useful life of the asset is 8 years and you are using it for 10 years. So in that case, you have to depreciate it over the 8 years. It's a little bit confusing, but that's what it is. So it means that the lease term is depreciated over the shorter. Okay, you have to always pick the shorter of the lease term and then the useful life. So in a question, when they give you the lease term and the useful life, you have to pick the shorter. So in this example, okay, so we have 50 years, you have 10 years. All right, so you have to depreciate it over 10 years because they are using it for only 10 years, so you don't need to depreciate it over 5 years. Now if this is 8 years, okay, and you are leasing it for 10 years, then you have to depreciate it over 8 years, okay, because this is actually the useful life of the of the lease of the building, and you are going to lease it for 10 years. So for prudence purpose or for prudence sake, you have to depreciate it over what, 8 years. So always remember that it's the shorter of the lease term and the remaining useful life of the assets. See, so you have to remember this. It's very important. Okay. Now let's come and do our okay, so now let's continue. We are going to do the lease accounting for we are going to learn the lease accounting for what's the name? We are going to do the lease accounting for the lessee or the tenant. Okay, we are going to do the lease accounting for the tenants or the user. Okay, whoever is going to use the assets. Okay. Okay, that's fine. Now, when it comes to the payment of lease, there are two ways. Okay, you can make payments in arrears. So it means arrears means you pay after using it. So payment at the end of the period. So that's arrears. Then we have advance. Advance is payment at the beginning of the period. So you pay before you even step your foot in a asset or in an apartment. Payment at the beginning. Okay, at the beginning of the period. So when it comes to the lease accounting, depending on the type of lease, okay, the accounting or the lease schedule differ depending on the type of lease we are talking about or the type of payment pattern we are looking at. Okay, so if we are looking at arrears, there's a way we calculate the lease schedule. Okay, we'll talk about the lease schedule in a bit, in a moment. And then when it comes to advance, there's a way we account for the lease. Okay. But first of all, let's look at the lease schedule. Okay, the lease schedule. What is it? Okay, okay. In exams, they will ask you to do a lease schedule. So, but you need to know it's just like a loan amortization schedule. Okay, so the lease schedule will just tell you um it will tell you let me say the total lease you are owing. Okay, it tell you the total amount you are owing, how much you have paid, and your balance. Okay, the schedule will tell you the total let's say lease you are owing or the total liability you are owing. Okay, and how much you have to pay for the period. Okay, and the payments, and then what is your balance? The balance at the end of the year. So it's like, let's say you have a lease liability of 8,000. Okay, that's the total liability for the year. So for the whole let's say period, if it's 5 years or 2 years, that's the total you have to pay. Okay, and then how much have you paid? Maybe you have paid 3,000. So if you pay 3,000, how much is left? Okay, it's left with 5,000. So that's how the lease schedule works. So year one, so we do it yearly. So year one, we are owing 8,000. We've paid 3,000. Our balance is 5,000. Then when we come to year two, okay, year two, we are owing at the beginning we are owing 5,000. Maybe we have paid 3,000. Our balance is 2,000, like that. Then we come to year three. Year three, we are owing 2,000. So we pay 2,000. Our balance is zero. So the lease schedule is something like this. Okay, it tells you how much you are owing at the end of each year. Okay, so that's how it is. That's the lease schedule. So in exams, they will tell you to do a lease schedule. Okay, so let's start with the lease schedule for arrears. Okay, the lease schedule for payments in arrears. Okay, now with the arrears, you pay at the end of the period. Okay, so let's say we are in year one. Okay. Year one, our balance is, let's say, maybe 2,000. Then we calculate interest on it. Okay, that we calculate interest. Last week I mentioned that the lease contains interest. Do you get it? It includes interest because we are paying in the future. So interest will accrue on it. So maybe interest of 3,000, or let's say interest of maybe 300. Okay, so this is our lease liability. This is the interest that has accrued. Then we come here, payments. How much have we paid? So maybe we paid maybe 500. Okay, what is our balance? Our balance is how much? So your balance is the lease plus the interest minus the payments. Okay, this balance is equal to the opening balance, which is the 2,000, plus the interest that has accrued on it, 300, minus how much you have paid. Will give you your balance. So in this case, this will be 2,300 minus 500 will give you 1,800. Okay, so at the end of the year one, we are owing 1,800. So then you come to year two. Okay, so we are done with year one. So year one, year two, this is how much we are owing. Okay, we have paid 300. Hey, our interest is, let's say, 300, yeah. But the interest may change depending on the amounts. It will not be the same throughout. But the payments, so let's say this is for the interest is calculated on the interest is calculated on the balance, and it is fixed. So if it's, let's say, 5%, okay, every year it will change because of the balance. So this one, let's say this is like 280. Then our payments, okay, this is 500. So how much is left? So it will be 1,800 plus 280 minus 500. Then you put it here. See, so that's how we look at. But another thing we have to notice. So at the end of the year, this is our liability. Okay, this is how much we are owing. But when it comes to liabilities, there are two types of liabilities. We have current liability and non-current. Do we all agree? All right. So, what is a current liability? A current liability is a liability to be settled within a year. Any liability we have to settle within a year is called current liability. Non-current liabilities, any liability you have to settle after a year, more than a year, more than 1 year. Okay, so at the end of year one, our total liability is 1,800. But the question you have to ask yourself is, are we going to pay all this amount the next year? Is that the case? What do you think? Are we going to pay everything the following year? Hello, are we there?
Yeah, we are here.
So are we going to pay all this balance? Are we going to pay everything the following year, or we will pay some in the following year?
I
Oh,
think we'll pay some in the following.
yes. So we will pay some in the following year. So the part we will pay the following year will be called current liability. The part we will pay the following year is called current liability. Then the part we will pay later will be what? Non-current liability. So in every lease question, you, after calculating your schedule like this and getting your balance, you have to break it down into two: the current and the non-current. Okay, the current and then the non-current. So in our example, the next question is, how much are we going to pay the next year? Okay, how much are we going to pay the following year? So we know that the following year, every year we'll pay 500, isn't it? So we know that at least every year we'll pay 500. All right. So it means 500 of this amount will be our current liability. Then the balance will be what? Non-current. I hope you get the idea.
Yes, sir.
So it means our current liability is 500. Our non-current is the difference between this and this, which will give us 1,300. Is that not so? So this is current and this is non-current. So always you have to break it into two. Yeah, current and non-current. All right. So with this explanation, let's look at an example. We have an example for us. So we have an example here. On 1st January 2015, a company which prepares accounts to 31st December acquires an item of equipment on a finance lease. The fair value of the equipment on 1st January 2015 is 20,000, and the company is required to make 4 lease payments. You have to make what? 4 lease payments of 6,654 in arrears. So all the time you have to check. This is very important. Okay. The interest rate implicit in the lease is 12.5%. The interest rate is 12.5. A. Calculate the interest charge at the end of the year. So they are saying we should calculate the interest charge. 2. Allocate the lease liability. Allocate the lease liability into current and non-current. See, like what we were explaining. You have to break the lease liability into current and non-current. Okay, so to solve this question, you need to prepare your lease schedule, like what we did. Okay, and this is arrears. So arrears means we'll pay at the end of the year after enjoying the property. So if we start here, we are not going to pay. We'll pay at the end here. This is where we'll make payments. Okay, so it means that if at the beginning we are owing 5,000, at the end of the year we will not be owing the same 5,000. It will be owing more than 5,000 because of interest. Okay, interest would have accrued from here to here. So if we are owing at the beginning of the year, we are owing 5,000. Then in the course of the period, there's an interest of maybe 500. Okay, then at the time of payment, we'll be owing how much? 5,500. Okay, yeah. So that's how it is. So when it comes to the arrears, interest comes when we are calculating when we are doing the schedule. Interest comes before the payment. Okay, so that's how the schedule looks like. First, you start with your balance. Your opening balance. Then you add your interest. You see, because the interest would have accrued by the end of the year before you deduct your payments. Okay, and this will give you the balance at the end of the year. Okay, so the balance at the beginning plus the interest minus the payments you've made. That will give you the balance. But so this is arrears. So this is how arrears work. Arrear works. Uh-huh. But advance, for advance, because you pay advance, you pay here. You pay here. You pay at the beginning. You see. So it means interest will not have accrued on that date of payment. Do you get? You are just paying at the beginning, so there will be no interest issue. Do you get? So advance, that's how it starts. We start with the balance just like this. Then we deduct our payments. Okay, payments will come. Do you get it? Payment comes before the interest. Okay, before the interest, and then so you just note the arrears payments. Payments comes after interest. Advance payment comes before the interest. See, so that's how it is. Okay, so let's solve this question. So this question has to do with arrears. So arrears, how do we go about it? So first we have to what's the name? Do our okay. We have to do our schedule. So the schedule, we start with the okay. So they are asking us to find the lease liability at the end of 2015. Okay, the lease started beginning of 2015. So it's just 1 year. Okay, so from 1st January 2015 to 31st December 2015. So we are doing it for 1 year. Okay, so we will start with the lease liability. So let me put this here, lease liability at the beginning. Okay. So because it's arrears, interest will come next. Okay, then after that we have our payments. Then we will have our closing lease liability or closing balance. So that's how it's going to look like. Okay, so at the beginning of the year, so this is year 1, that is 2015. So at the beginning of year 1, how much are we owing? So the lease liability is 20,000. Okay, the lease liability is the same as the fair value. Okay, so you put your 20,000 here. Then the interest. So they said the interest rate is 12.5%. So this is 12.5%. So the interest is 20,000 multiplied by 12.5%. How much are we going to get? So 20,000 multiplied by 12.5%
It's
is
2,500.
good. Yeah, so that's 2,500. Okay, and then payments. How much we have to pay every year? Every year we have to pay this 6,654. Okay, so 6,654. Okay, so we will deduct this. Okay, so it will be this. Hello. Yeah, you have a question.
Yeah, Max.
Yes, sir.
So, as at now, still see you still have to rule a line and do this thing on paper. All of
How you go do am o? Yeah, they are still going by the manual. But I heard they are trying to they are trying to do a pilot on trying to use computer in answering the questions, like just like ACCA. But as at now, it's manual like that. You have to rule line and all that. So 20,000 plus 2,500. Yeah. So minus this will give us. So what will be our closing liability? So 20,000 minus 2,500. Sorry, plus 2,500 minus 6654. So we'll get 15,846. Okay. So at the end of 2015, this is our balance. So the next question you have to ask yourself is this balance, you have to break it into two. Okay, you have to break it into current liability and what non-current. Uh, you have to break it into what current liability and what non-current liability. So right now, how do we determine? We know that the current liability is how much we are going to pay the next year. Okay, so we know that next year, which is year two, we are going to pay this. Okay, so that should be our current liability. Okay, but there's another issue. Okay, yeah, clearly this is how much we have to pay. That is 6654. Okay, and then the balance will be our non-current liability. Okay, now the issue is that this payment we have to pay, we have to make the following year. Now the following year you have to pay this. Okay, the following year this is how it's going to be 15,846. Then there will be interest on the 15,846. There will be interest of 15,846 15,846 multiplied by 4.5%. So that will be 1980. Okay, let me make it 1981. So 1981. So how much will be left? So it will be 15,846 plus 1981 minus 6654. Okay, so this is what will be left. That will be 11173. Okay, so we have to interpret what we've seen here. Yeah, the current liability, even though it is this amount, but we have to make some small adjustments. Okay, I will show you why. Okay, so next year when we pay this amount, this will be the balance that we have to pay. Okay, so in actual fact, this will be our non-current liability. Okay, this 11,173 is our non-current liability as at year one. Okay, because year one, when we are standing at end of year one, when we pay this what will be left. Okay, so it means this amount is our non-current liability. Okay, so this is 11,173. Okay, and now the issue is what is our current liability? Okay, the current liability is the difference between this and this. Okay, this and this will be our current liability. So it will be how much is it going to be? 15,846. Okay, so our current liability will be 4673. So it will not be this. Okay, but it will be 4673. So when we add this plus this, we should be able to get this. Okay, is it confusing? Or I should explain why we are. So when we add these two,
Okay, Max.
yes,
Yeah, so for year two, when we are reporting in the financial statement, 11,173 will be non-current liability. Then the
yes.
difference between the closing liability and the payment, and no, the difference between the year one closing liability and year two
Mhm.
is the current liability.
Current liability, yeah, yeah,
All right. Okay.
yeah. So that's what it means. So the when at the end of year one, okay, to determine your non-current liability for year one, you have to go to year two and do another calculation for it. So at the whatever you get here will be your non-current liability for year one. Okay. So the same way, if at the end of year two, if you want to know the non-current liability for year two, you have to do another line for year three. Then now it's a little bit confusing, but okay. So that is how we go about it. But I'll try and explain it in another way. Okay. So the question is, you see, we are getting four instead of ideally it should have been this. Then current liability should have been this because next year this is how much we'll pay. Okay, that should be there. So why are we getting 4673? Okay, let's find the difference between 4673 and 6654. Okay, that will tell us where the issue is coming from.
Well, the difference is just the interest.
Exactly. So it means that what it means is that this amount includes interest. This 6654 includes interest. Okay, so for you to get the current liability for the following year, you deduct the interest from this. Okay, so another way. Oh, I've cleared everything. Let me see whether it's okay. Good. So another way we can look at it is okay. Another way we can look at it is this is 6654. So to get the current liability is the 6654 minus the interest 1981. It will give us the current liability. Okay, um which is 4673. So once we get the current liability, you can easily get the non-current. You just deduct this from this. Okay, so the non-current will be 15,846 minus 4673, which is the 11,173. See. So the bottom line is that when you are working with arrears, okay, and you are told to find the non-current liability the current and the non-current liability, you go to the next year and calculate, do the schedule. Then to get the non-current liability, deduct the interest from the payment, you get your current liability. Or you can also do everything to the end here, and this will be your non-current liability. And the difference between these two will be your current liability. So what it means is that we are only interested in the principal amount. We are not interested in the interest. You see, because the interest will go to the income statement. And so that's why we don't include, when we are reporting on the interest, this interest will be reported in the income statement. So that is why we don't include it in the principal or the balance sheet items. So that is how it is. Okay, so in exams, the examiner usually will ask you a question like this. After getting your liability, you have to break it down into current and non-current. Do you get it? Yeah. So that is how. Okay, now let's look at the advance. Okay, the schedule for the advance. Okay, so like I said earlier, with advance you pay before you pay at the beginning of the period, then before we calculate the interest. So with advance, we also start with the opening balance or the opening lease liability, like this. Okay. Then the next column is the payments. You see, because you pay first. Then after the payment, you calculate your interest. Then we'll get our closing balance. So that's how the advance is calculated, like this. You see, so let's see how we go about it. Okay, so the opening balance. So we are using the same. We are doing the same. We are using the same. What's the name? Question to. Where is the question? We are using the same question. So the opening balance is 20,000. So we put it here like this. Then the payment is 6654. This one. So 6654. Okay. Then the interest is what, 12.5%. Okay, so the interest is calculated, the other one, this one we did, where is this one, the one we just did, this interest, it was calculated on the lease liability, on the outstanding lease liability. Okay, this was calculated on this. Okay, so when we come here, the interest, are we going to calculate it on this, or we have to calculate it on a different figure? What do you think? Are we going to calculate it on this or another figure? What are your views? Hello, Mike, are you there? Today I've not heard your voice. Oh, Mr. Okay, can you help us? The interest, are,
Yeah.
how are you going to get it?
Well, I think it should be on the difference between the opening balance and the payment.
Yeah, excellent. Yes. So because we pay, so this opening balance is out at 1st January 2015. The payment is also the same date. You see, we pay everything the same. So it means this interest will be paid after deducting, or will be calculated after deducting this from our liability. You see, so it means when you are working with the advance, you need to create another column. Okay, we have to create another column so that we get that figure that will calculate the interest on. Do you get it? So we have to erase this, and then that column is called liability. Okay, after day one. Okay, after day one means in our case liability from 2nd January going, because we paid on 1st. So after day one, that is where day one out to 31st December. You see, so that is where the interest will be calculated on. You see, so in that case, yeah. So the liability after day one is this minus this. So how much are we going to get? So 20,000 minus 6654. Yeah, so that's 18,346. Okay. Then we'll calculate our interest, which is the 12.5. Yeah. So the interest will be calculated on this amount. C times 12.5%. So we are going to get 1668.25 like this. Okay, then after that we'll get our closing balance. So our closing balance is actually this plus this. Do you get it? Is this plus this? But we have already this amount is as a result of the difference between this and this. So the closing balance is just this plus this. I'll give you. If you add all of this, it's like tautology. In fact, it's not even, if you want to start from here to here, then you don't have to include this. You have to do this plus this minus this plus this. That is if you want to, but you have to start from here. To make life simple for you, is this plus this will give you this. See, so that's 18,346. So we are going to get 15,014. Yeah, so that's our closing lease liability. Okay, so just like we did for the arrears, we also have to find the current and the non-current liability, this one. So to do that, we have to do a schedule for the year 2. Okay, so this one will come here, and then we'll pay the same amount. Then how much will be left? That's what 8,360. Okay, then calculate your interest. So that's 1045. Then the closing balance. 94. It's 9405. Okay, so we have to find our current liability and our non-current liability. So what is our current liability? Okay, so when it comes to the lease, when it comes to advance, getting the current liability is not difficult. The current liability is just the payment you are going to make the following year. Okay, which is what? 6654. Okay, the reason is that this amount doesn't include any interest. Okay, because the interest is calculated after making the payment. Okay, so it means this amount has no interest components. Do you get it? So with advance payment, the payment itself will be your current liability. Okay, and then after payment, whatever will be left, this amount will be your what? The non-current liability. So it will be 8360 like this. Okay. So when you add this plus this, it should give you this. So it is this figure that we have divided into 2. You see, so it should give you 15014 like that. Do you get it? Yeah, so this is how we go about the advance. Okay, this is the advance payment in advance. Okay, this is how we go about it. Any question? Are we good? Okay, so we have a question here. This is a past question from ICA. Okay, can somebody read for us? Hello, are we there?
Yeah, I'm here.
Yeah.
Okay, all right.
But
Somebody should read
I
for
think
us.
why?
Okay,
Okay. On 1st August 2018,
okay,
Asawasa Limited entered into an agreement to acquire a motor vehicle. The
okay,
terms of the agreement were that the vehicle should be leased for 5 years from the date of inception, subject to a deposit of 19,972 Ghana cedis and 5 annual payments of 6,500 Ghana cedis in advance. So this is in advance.
yeah,
Okay. Commencing on 1st August 2018. The fair value of the vehicle and the present value of the lease payment were 48,000 cedis at inception. The interest rate implicit in the lease is 8%. Required in accordance with IFRS 16, leases show with appropriate calculations the accounting entries required to record the transaction above in the financial statements for the year ended 31st December 2019. 7 marks. Okay.
yeah. All right. Thank you. So this is cool 7 marks, and in the exams, getting a mark is very very important. And I mean, this is a very big mark. 7 mark is 7 marks is a very big mark. So if you know how to do it, I mean, you are in a very good position to pass the exams. Okay, so let's see how we go about it. So there's a company called Asawasi, and they entered into a lease agreement. And what is the assets we are talking about? It's a motor vehicle. It's a motor vehicle that they leased. And what are the terms of the agreement? Okay, they said the vehicle will be leased for 5 years. So the term is what, 5 years? That's the lease period or the lease term. Okay, and then what are the other conditions? They have to make a deposit of 19,000, 19,972. This is a deposit they have to make, and a 5 annual payment. Okay, so it's here. So that annual payments is 6,500. Okay, and when are we starting payments? 1st August. Okay, so the lease started 1st August. We are paying 1st August. So it means it's an advance. Okay, what is the fair value of the vehicle or the lease liability of the whole the lease liability for this lease is 48,000. So remember, the fair value is the same as the present value of the lease payments. So in this question, they've given you the fair value, and they are saying that they are all the same. So you don't even need to worry yourself. Just pick this as the lease liability. There are some questions they will just say the fair value, but it's the same as this. But there are some questions that they will not. They will give you neither the fair value nor uh, the lease payment, the present value of the lease payment. They will not give you, but they will give you the annual payments. So you have to determine the lease liability by determining the present value of all the lease payments. Like for instance, assuming that we were not giving this 48,000, assuming we were not giving this 48,000, but we were giving this 6,500, we have to try and find this, and this is what the present value of all these payments for 5 years. So year 1, year 2, year 3, year 4, in that order. So let's see how. Assuming that you meet a question like this, so you have 4, you have 5. So we have to pay 6,500 every year. So 6,500, 6,500, 6,500, 6,500 like that. Now this is so we have to find the discount factor. Okay, so the discount factor here is that's the interest rates implicit in the lease, which is 8%. Okay, so this is advance payments. Okay, so advance means at the beginning of the year. Okay, so it means that actually this one will be this one, sorry, this one will be 0. The year 1, the factor or the power will be 0, but we will pay at the beginning of the year. This one will be 1, this one will be 2, this one will be 3, this one will be 4. So that's how it will look like. So this one, the discount factor will be 1, sorry, it will be 1 over 1 plus 8%, raise the power 0. Okay, because it's at the beginning of the year. So you get 1. So this one will be 1. This one will be 2. This one will be 3. And this one will be 4. Okay, so this is how the discount factors will look like. So when you finish, to get the present value, you multiply this by this. Then you do for all of them. When you finish, you add all of them. Okay, so we are getting what? 28,000 28,028. Okay. So but it should be at least it should be equal to 48,000. But why is it not equal to 48,000? It's not equal to 48,000 because they were made to pay a deposit. You see, they were made to pay a deposit of 19,792, which means that at the beginning of the period, apart from paying, apart from paying the 6,500, they also have to pay a deposit of what's the name? 19,970. This is 19,970. So 19,970. 970. So you mean at the beginning of the year or at the beginning of the lease, they have to make 2 payments: the deposit plus the normal payment. So let's see. You see, now you can see that we are getting the 48,000, which is, I mean, with the same as this. Have you seen it? So sometimes they will not give you this figure, but they will give you, I mean, this, and you have to determine the lease liability. Okay. So in this sitting, I'm sure the examiner was lenient and then gave out the fair value. You see, so that's how it is. Okay. But assuming that it was in arrears, if it was in arrears, then this would have been 1. Okay, because it will be at the end of the year. But since it's arrears, so this since it's advanced, year 1 will be 0, like this, in that order. I hope you get the idea. Get the idea, right? Okay. So right now, let's see how we'll solve the question. Okay, so we have to do our okay. So let's see how we'll go about this question. So, like I said, every lease you have to determine 2 things. Okay, you have to determine the lease liability and then the right of use. And then what's the right of use. Okay. Okay, so this is a liability, this is an asset. This is a liability, this is an asset. So now we know our lease liability, which is the 48,000. The one we got here. Where is this? I mean this one. 48,000. We know it. So our lease liability is 48,000. Okay, what about our right of use? What will it be? And who can remember how we determine the right of use? So we said the right of use is the lease liability plus any direct cost. Okay, this is equal to the lease liability plus any direct cost. So if there's no direct cost, then the right of use is the same as the lease liability. So in the question, there was no direct cost. They didn't mention any direct cost in the lease. Yeah, hello, boss. I see. Okay. Wow. Okay. Let me look at it. Ah, hello. Can you hear me? Hi. Hello. Hi.
Hi.
Oh, sorry about that. In fact, I didn't know I was offline. Wow. Okay, so where did I get to? And then the network went off. Hello. Hi.
So Max, I think you have to start over this section again.
Okay, this section. Oh, okay. Okay, so we finished with the reading of the question, right? The question. Did we finish reading this question?
No, we got a
Yes,
part
I think so.
Okay, all right. So okay, let's start all over with this question, right? So that we all be on the same page. Okay, so on 1st August 2018, Asawati Limited entered into an agreement to acquire a motor vehicle. The terms of the agreement were that the vehicle will be leased for 5 years from the date of inception, subject to a deposit of 19,972 cedis and 5 annual payments of 6,500 cedis in advance. Commencing on 1st August 2018, the fair value of the vehicle and the present value of the lease payment were 48,000 at inception. The interest rate implicit in the lease is 8%. Required in accordance with IFRS 16 leases, show with appropriate calculations the accounting entries required to record the transaction above in the financial statement for the year ended 31st July 2019. Okay, so let's see how we'll go about this question. Okay, so there's a company called Asawasi Limited. They entered into a lease agreement, and what is the asset involved? It's a motor vehicle. Okay, so they went to lease a motor vehicle. Okay, what was the term of the, or what were the terms of the agreement? Okay, so the terms of the agreement were that the vehicle will be leased for 5 years. Okay, so the lease term is what, 5 years. And what else? From the date of inception, subject to a deposit of 19,972. So they have to also make a deposit. You know, every landlord and or every owner and their terms. So this owner is saying Asawasi has to make a deposit. Apart from the normal 6,500 they will be paying, they also have to make an initial deposit of 19,972. And they also have to make annual payments of 6,500 in advance. So the annual payment is 6,500. Then the fair value of the vehicle and the present value of the lease payment is 48,000. Okay, and the interest rate implicit in the lease is 8%. All right. Okay, so they've given us all the information we need to know. So they've given us that, they've told us that this is an advance lease. They've given us the fair value of the vehicle. So remember, the fair value of the asset is the same as the present value of the lease payments. So in exams, they can give you either the fair value or the present value of the lease payments. But if you, but there are times that you will not be given the fair value, and they will not also tell you the present value of the lease payments. But they will give you the amount to be paid every year. So you have to use it to determine the lease liability. You know, we said the lease liability is equal to the present value of the lease payment. So if they don't give you the fair value, okay, it means you have to determine the lease liability using the annual payments. Okay, 6,500. So in this question, assuming that we were not giving this 48,000, we were not giving, but we were only giving the 6,500. Okay, how would we have determined uh, the fair value or the lease liability? Okay, so if you meet a question where you are not giving the fair value and you have to determine the lease liability, you have to calculate the present value of all the lease payments, and when you finish you add them. Okay, so that's what I was trying to do here. Okay, so let's say, so we are coming to do, so we are assuming that we are not giving this amount and we have to determine it. Okay, so to determine it, the lease liability is equal to the present value of future lease payments. So you have to determine all the lease payments. And we know the lease payment is 5 years. You see, 5 years. So it means I have to do year 1, year 2, year 3, year 4, year 5. Okay. Then how much do I have to pay every year? Every year I have to pay 6,500. 6,500, 6,500, 6,500, 6,500. So this is the annual payment. Okay. So we have to find a discount. We are finding the present value, so we need to know the discount factor before we can find the present value. Okay. So one thing you have to notice that this question is advance. Okay, this question is payment in advance. So we'll pay at the beginning of the year. Okay, so for year 1, we will not pay at the end. We'll pay at the beginning of the year 1. So when you are determining the discount factors, okay, the exponents you have to use. Discount, when you are doing discount factor, you use an exponent. The exponents usually are the years. So for year 1, it will be at least, it usually is exponent 1, exponent 2, exponent 3, and in that order. But because this is advanced, so it means year 1 it will be exponent 0, year 2 it will be exponent 1, year 3 is exponent 2, year 4 is exponent 3, year 5 is exponent 4. Do we understand why it's like this? Hello? Why we are
Yes.
okay, good. Yeah, because it's at the beginning, you see. So the exponents at the beginning of year 1 is 0. Okay, so here the discount factor is 1 over 1 plus 8%, raise the power 0. So this is raise the power 0 like this. So you get 1. Okay, so the rest, so this one will be raise the power 1, raise the power 2, raise the power raise, raise the power, raise the power 4. Okay. So that's how it's going to look like. So the present value will be this multiplied by this. So when you finish, you do for all of them. Then you add everything. So we are getting um, yeah, we are getting 28,028. So this is the lease liability. So the lease liability should be equal to the fair value. So let's compare this to the fair value. Okay. Now the fair value is what? 48,000. It's not 28,000. So right now, what is the issue? So the issue is that
Is it a deposit?
exactly, the issue is that the at the beginning of the year, after paying the 6,500, we also had to pay deposits of what? Um, 19,970. Okay, so 19,970. Okay, so that means at the beginning of the year we made two payments, the deposit plus the normal annual payment. You see. So now after doing that, we are getting our 48,000. Do you get which is this? So in exams, if you are not given the fair value, you can also you have to use this method to determine the lease liability. Okay, good. So now let's continue. So now we know that our lease liability is 48,000. Okay. So we said that when it comes to lease, there are two issues. Okay. One is the lease liability, which you have to determine, and the other one is the right of use. So this is an asset, and this is a liability. So now we've determined the lease liability, left with the right of use. Okay, so what is the right of use? I mean, last time we said the right of use is the lease liability plus any direct cost. Okay, this right of use is equal to the lease liability plus any direct cost. Okay, but in our question, there's no direct cost. There was no direct cost. So I mean the right of use is the same as the lease liability. Do we agree? Okay, so at the end of the day, our lease liability at the beginning of the year or for the whole lease, okay, is 48,000. And our right of use is also 48,000. And so we have established this. Okay. Now the next thing we have to do is um, we have to create our lease schedule for the year 2019. So from 2018, 1st August 2018 to 31st July 2019. That's 1 year. So we have to determine we have to create our what's the name? Our lease schedule. So we start with the opening what's the name? Opening lease liability. Okay, and this is advance. Okay, so it means the payments will come next. Do you get it? The payments will come. But in this case there was a deposit. Okay, so it means the payment for the first year will be two payments. I hope you agree. You agree with me that for the first year, apart from the normal deposits we made, okay, apart from the normal deposits we made, apart from the normal lease payments, we also had to make a deposit. Okay, so it means for the payment, it's going to be 6,500 plus the deposits, which is 19,972. 19,972. Okay, yeah, that is for the first year. So that's year one. Okay, so let me see. So okay, we have to do it somewhere so that it will not come here, and then come and put the results here. Okay. So opening lease liability. Opening lease liability payments, then liability after day one. Okay, after day one. Okay. Then we calculate our interest. Then we calculate our closing liability like this. So so it's going to be like this. What is that? So it's going to be like this. Okay. So the lease liability was how much? So the year 2015. Hey, what was the year? 2018, 2019. Okay. So let me say year one. Hey, I don't have space here. So let me just please. So year one. The lease liability was 48,000. And then the payment we made. Okay, the payment we made at the beginning was 48. Sorry, the deposit, which is the 19,972. Okay, 14,972 plus the 6,500. So how much are we going to get? 19,972 plus 6,500. We are going to get 26,472. Okay, so that's the total payment we made at the beginning. So the liability after day one will be the 48,000 minus the 26,472. So we are going to get 21,528 like this. Then the interest is 8%. So 8%. 8% of this. 8% of this will give you 1,722. Then the closing liability will be what? It will be this plus this. So 21,528 plus 1,722. So you get 23,250. Okay. So when you get this, we have to break this into two, current and non-current. So to get the current and non-current, we have to go to the next year. So we have 23 250. Payment will be 6,500. Liability after day one is going to be 6,500. It's going to be 16,750. Interest is 1,340. Closing liability is this plus this 16,750. So this 18,090. Okay, good. So right now so the question is, show with appropriate calculations the accounting entries required to record the transaction above in the financial statement for the year ended 2016. So they are telling us to show all the entries we will make, okay, concerning this transaction. Okay, so we are done with our schedule, but this is not entry. This is just to this will help us to find the values, okay, that we'll be using for our entries, but it is not the entry itself. Okay, so first we need to know the entries we'll be making. One is we have to know our lease liability, our closing lease liability, and we have it. After that, we have to break it into current and non-current. Okay. Then when we finish, we have to determine our right of use assets. But this will go to our liability. This will go to assets. Then we also have to calculate interest. The interest will go to the income statement. Okay, the interest. Okay, and then we also have to calculate depreciation. So these are the four things we have to do: the lease liability, right of use, interest, and all that. So with the lease liability, we have determined it. Okay, we know that the current is this, and the non-current is this. Okay, when we are dealing with the advance, this is how we find the current and non-current. So we have dealt with this. Okay, when we finish, you have the right of use. Okay, the right of use is an asset. Okay, so the assets, we know that the initial amount was 48,000. Okay, so and this was as at 1st August 2018. Okay, but now we are reporting at 31st July 2019, so that's 1 year. So we have to depreciate it. So we have to calculate depreciation. So depreciation will be 48,000 over the useful life of the assets. So here we know we were not given a useful life, we were given a lease term. So we will depreciate it over the lease term of 5 years. Okay, we will depreciate it over the lease term of 5 years. So how much are we going to get? 48,000 divided by 5. So we'll get 9,600. Okay, so what will be our carrying amount? Our current amount will be this minus 48,000. Okay. So we are going to get 38,400. Alright, so that is how it's going to look like. Okay, so that's how it's going to look like. So this is our current amount as at 31st July 2019. Okay, so now we have determined our right of use. The interest is this amount. Okay, so it's not a problem. We have determined our depreciation, which is this. So we can put all of them together. Okay, now we have to do a journal to record all these transactions. So what are the journals? So you do your debits, credits. So let's do all the let's do the debit side. When we finish, do the credit side. So the first one is depreciation. Our depreciation is how much? 9,600. So this will go to the income statement, this amount. This will go to the income as an expense. Okay, what else? Let's deal with the assets. Okay, the current amount of the assets is a right of use. So the right of use, the balance is what? 38,400. This one. Like this. Then let's go to the credit side. The credit side, we have lease liability. You know, liability has a credit balance. So the lease liability, we have the current and the non-current. Okay, so okay, let's just put everything together as one. I mean, or we should separate it. Okay. Current. The current is 6,500. So 6,500. So this one is a current liability. So lease liability. This one is a non-current. Okay, the non-current is 16,750. 16,750. So 16,750. Okay. What else? Interest. Yeah, the interest is an expense. It has to go. It has to come to the debit side. Interest. The interest expense, which is 1722. 1722. Okay, so I think that's it. Depreciation, right of use, the liability, the interest. So when you finish, yeah, we should get. Okay, so this plus this will give us how much? 6,500 plus 16,750. Hey, this is giving us. Why is it? Okay, let me see something. 23,250. And this is more than that. Let me see what is happening. 9,600 plus 38. 38,400 plus 1722. 49,722. Oh, why is it not? Let me see. Let me see. So 23,250. Let me see what's happening. So hey, who can tell us what's the issue with our journal? I don't know why it's not balancing. Okay, let me see something. Okay, let me see. Okay, let me see. 49,722 minus 23,250. So that's the difference is 26,470. Okay, so this is coming from this. Okay, so that means we have to credit cash. Because we pay this with cash, you see, our bank. So it means you have to credit bank by 26,472. Okay, so that will give us 49,722. Okay, are we fine? Hello? Hello, are we there? Or have I gone off?
Yeah. No, I'm here.
Okay. All right. So, but I hope you understand the journal entry. Okay. So at the end of the day, that's how it will look like. All right.
Yeah, but there's something that I think the lease started in August. I just want to find out if it were to start in January, would we have calculated the interest the same?
Okay. Yeah. So the interest is calculated based on the period. So depending on, so if it's less than a year, then it means we have to let's say prorate it. So if let's say it was maybe 9 months, so it will be 21,528 times 8% multiplied by maybe the number of months over 12, something like this. So depending on the duration. Okay. But usually it's 1 year. Yeah, I hope it's fine with
This
that.
particular question, let me see the end of year that they were expected to calculate.
Okay,
Is it
so
2018?
yeah, that's 31st July 2019.
Oh, okay, so that makes it 1 year. Okay, all right.
So from 1st August 2018 to 31st July 2019. So that's 1 year. Yeah. So that's how it is. Okay, so we are done with the leasing accounting. So let's look at the lessor accounting. Okay, the lessor accounting is similar to the leasing accounting, but there are some differences. Okay, so as for the lessor or the owner, as for him, he will be receiving payments. Okay, he will be receiving payment from the what? From the lessee. So it's like, so in our case, at the end of the day, he's expecting to receive 48,000. Okay. As for the lessor, at the end of the period, he's expecting to receive 48,000. So it means this 48,000 will be a receivable. Okay. So as for the lessor, the liability of the lessee is a receivable to the lessor. Okay. So that 48,000 that the lessee will paying will be like a receivable. Do you get it? And every year it will be reducing. So at the beginning of the year, he'll be expecting 48,000. So when the lessee makes payment, we'll deduct it so that the balance will be reducing until it gets to zero. You see how it works. So in his case, is the receivable balance plus interest minus the amount that he's going to receive. So it's the receivable balance, then the interest that will accrue on it minus the money he will receive or the receipts. Okay. This receipt is the payment. The payment that the lessor will make, he is going to receive it here. Then after that, we'll get our balance here. You see, so that's how the lessor works. So let's look at an example. So this is the format for the lessee. So the lessor. Okay. So opening net investments. Okay. So this is the fair value or the amount he's expecting to receive. Then you add the interest that has accrued, less the interest, less the receipts. Okay, less the receipts. Then whatever then we'll do our calculation. We'll do our arithmetics and then get our closing net investments. Okay. So let's look at an example. Example. On 1st January 2018, entity a dealer or a lessor, okay, he is a lessor or the owner. So the entity A is a lessor, enters into a 5-year equipment lease 5-year equipment lease contract with entity X, lessee. The following information is relevant for this lease. Okay, annual lease payments of 20,000 are to be made at the end of each year. Okay, so it means the lessor is going to be receiving 20,000 every year. Entity A estimates the equipment to have a fair value of 95,000. So at the end of the day, that's the total amount he's going to receive, 95,000. So it means this will be his total receivable. This amount is the total, and he'll be receiving it small every year. He will receive some of it. The economic useful life of the equipment is 7 years, and entity A estimates the residual value of the equipment to be 25,000, of which 15,000 is guaranteed by entity X. The interest rate implicit in the lease is 8.7%. Required: calculate the net investment in the lease as at 31st December 2018. Calculate the net investment in the lease as at 31st December 2018. B. Calculate the interest income for the year ended 31st December, for the year ending 31st December 2018. Okay, so in this case, we are dealing with the lessor. So he is going to be receiving the money. So every year he is going to receive 20,000. Okay, and then the total amount he expects is 95,000. Okay, so let's see how. So let's see how we'll go about it. So year one, okay, the opening net investment is 95,000. The interest is what? 8.7%. So 8.7% of this, 8.7% of this will give you this. Okay, then the receipts. Every year they are going to receive 20,000, and the closing net investment is 83,265. All right. So the question says we should find the net investment in the lease as at 31st December. So the answer is this. Then we are told to find the interest income for the year ending 31st December 2018. Okay, which is this. All right. Okay, the last topic is sale and lease back. Okay, this one will end here. We'll continue tomorrow, right? This is also it's a little bit confusing, so I think we should end here and continue tomorrow. All right. Okay, is there any question? All right, so if there's no question, thank you for joining and see you tomorrow.
Thank you too. See you tomorrow.
Okay.